business partners, but also senior accountant from Rising Tide, Braden Johnston, with us today. Now, BJ, I'm going to put you under the pump a little bit, but wanted to get into things pretty quickly. But before we do, how are you going with everything that's happening during the coronavirus pandemic?
Yeah, it's interesting. I think when anything like this happens, you tend to find another gear straight away. People tend to stress out and throw everything up in the air, or they get to working. And I'm probably more on the working side of things. So, yeah, the last month's been, from a workload, it's been huge. But yeah, staying on top of it at the moment. Got great support at home. Amanda's taking care of Finn, who's a pretty active 3-year-old, and obviously the support from the team and the clients has been phenomenal. So, yeah, it's certainly not a sustainable thing. I'm feeling it at the moment, but yeah, at the moment we're kind of business as usual, staying on top of things and trying to speak to as many people as we can.
And what a pleasure it is to have Australia's greatest book stand behind you. Those colours are incredible.
I know.
Mate, let's get into it. What should small businesses be doing right now in the midst of what's happening?
Yeah, right now, the key thing is strategy. I think whether it's looking at, what stimulus is available to you, how we're preserving our cash flow, how we're going to come out of this at the end of it. I think that's the key thing. You need to be putting in place basically a 6-month plan. So there's the right now, which is just save as much cash, get the stimulus packages that are available to you. And then also, how do you come out of the other end of this actually ahead of where you are right now? And for some businesses, this is a really good opportunity. There's going to be a bit of a lag. Once the lockdown ends, businesses that hit the ground running, they're going to be so far ahead of the market and can, absolutely fly into into 2021. And for other businesses, there's going to be a huge lag. So, and then you've got Christmas probably on the back of that. So, yeah, it's the strategy is absolutely key. You need to be able to hit the ground running as soon as this lockdown's over.
So when you talk about strategy, what are the simple steps that someone can do to review their strategy, and what does strategy entail?
Yeah, so the strategy is more around giving you the best opportunities to succeed. So right now we need to make sure that we protect cash flow, and the business will be viable if we go to full lockdown, which who knows if that's going to happen or not. We need to work out a plan of attack for our staff. We don't want to have to then re-engage staff in 6 months' time and try and put together another team if your business is in hibernation. So it's about, how do we manage all the different parts of your business in a way that might not be at full pace like we would have been 3 months ago. So the strategy itself is crucial, and it's not just about the bank account balance or the profit and loss or your team. It's all of those things together to give yourself the best chance to come out the other side. So you need to be speaking, with your accountant, with your advisor, with your financial advisor, mortgage broker, all your suppliers, any utilities, all these things to try and give yourself the best opportunity, not only from a cash flow, but from a business and a household perspective.
All right. So what we're saying then, let's get a batting order of who you need to talk to, write those down, and then maybe just aim to have a proactive conversation with one of them each day for the next week.
Perfect.
What would a contingency plan generally entail, and how do you know when to take the next step on that contingency plan?
Yeah. Look, the contingency plan. Whether that's do you go into hibernation? Do you apply for certain funding from government? I think there's key triggers, and there'll be an absolute necessity. Sometimes it'll be we don't know where the money's going to come from to keep food on the table. That triggers your contingency plan no matter what. For those that are a little bit more fortunate, where they're in a position that it's not right now that they need necessarily need funds, it's planning to make sure where those key points are. And that, from a business point of view, that might be a certain drop in turnover. It might be a certain point of cash in the bank. Around the household, that will be exactly the same. It's like, well, as a family or a household, you need to know at what point we need to start looking at other options and tightening the belt, and also looking at other options like Centrelink and things like that.
Okay, so would it be a good game plan? I'm obviously a small business owner. For me to maybe check my financials from this time last year and also review what's happening, what's in my pipeline right now, and then start to have some conversations with, say, my staff or my suppliers and just let them know how I'm going and just create a really proactive communication base. And then, as you say, have some clear lines when you will make changes. Is that a good way to play it?
Yeah, communication now, besides the strategy piece, communication is your number one thing, because, if you're not talking to your landlord or you're not talking to your bank, they don't know how you're traveling. If you're not talking to your advisor, they don't know how you're traveling. Even your family, it's really important that the communication piece is there. Right now, we're seeing there's a lot of goodwill right across the board, business, banks, individuals. People want to look after each other. And if you're forward and putting it on the line and saying, look, we're really battling with this, people are going to get around you and help you out. So the communication side of it is just absolutely crucial. And the sooner that you're having these conversations with landlords, with the banks, the sooner you can get a solution. Even if there's, we talked about contingency, even if there's nothing to do right now, it's on the horizon. So if in the event that something does go bad for you in terms of financial side of things or business side of things, you can then easily initiate whatever that contingency looks like. And for a lot of people, they leave it too late, and then they're trying to scramble to get things sorted, and things tighten up, and landlords are already under the pump, and banks are less likely to help you out.
Yeah, right. So just on that topic of when's too early and when's too late, got a really good question from Brad. So the balance between protecting cash for now and investing in, as you put it before, the new world opportunities, what's the right balance?
Yeah, the right balance is obviously different for every business, but you need to, every business owner right now should have we should be putting together, and it's not going to be perfect, but should be putting together a budget for the next 6 months. They need to work out exactly what it's going to cost them to keep the business moving, even if it's dormant or in hibernation. What's it going to cost you to get through 6 months in that status? Then you've got a really good idea of do you have enough cash to get you through that 6 months, or do we need to look at some other income streams to top you up for that period? And then if there's potential opportunities out there in the market for you, how much capital or how much cash you're going to have to put to those opportunities to enable you to hit the ground running or potentially expand or whatever that looks like. So yeah, there's a minimum level that you need to be doing right now, and that's your 6 month budget. And then it's, do we actually have the capacity from a cash flow point of view to take those opportunities? If a business is in hibernation or is scaled back at the moment, there is, we know there's going to be a lot of extra time. So this is, a really, really good time to be putting in place some proactive activities.
Yeah, okay. So I suppose one of the key things that people need to do, and I love a sporting analogy, is actually to have your defensive game plan really short up. So the next 6 months of cost, thinking worst case scenario from your business, but then from a more attacking perspective, probably start to have some conversations with the people where you think opportunities might arise, and just start to maybe put some money aside once you know you've got those 6 months of expenses covered, and speaking to the people that are going to help you capitalize on those opportunities moving forward. BJ, would you recommend as well, I mean, the end of the financial year is coming around really quickly, and often where businesses can get a little bit of a sugar hit from a cash flow perspective is to get their tax returns done quickly, if they've been on top of their BAS and their quarterly installments along the way. Would it be worthwhile spending a bit of time to try to get everything sorted, so as soon as July 1 comes past, that they can get things sorted and try to get a bit more cash flow back in their pocket, if that's the case?
Yeah, well, particularly if there has been a downturn in your business revenue and you've been paying quarterly installments throughout the year, you may have paid too much tax. So in that scenario, you definitely want to get your work in quickly, get it done, get that tax back if you've overpaid. We know that the stimulus packages are more around the BAS at the moment. That's where a lot of those credits are happening. We know that the cash flow boost is allowing businesses not to pay the PAYG on employees' wages. And we know that there's going to be a lump sum payment coming in October. So, look, in terms of income tax, if you've overpaid because you've paid way too much in installments, get your stuff in, we'll get it done for you, and then you get the refund back. If you're in a position where you have still got a gap of tax to pay, then certainly you would probably don't want to be pulling the trigger on that straight away. We want to delay that as much as possible to keep that money in your pocket. So, I think, from end of April right through to kind of mid-June, we're doing tax planning with all our clients. So, that it will be revealed through that process as well. So I think, before you even get to the tax return stage, you need to have that chat around what does it actually look like for you for this year? What's our revenue estimate going to be? What's the tax impact of that? And are you going to get a refund? And if it comes out with a refund, then pull the trigger on it straight away, get it done.
Okay, so we need to get all of our numbers lined up, have a chat with us or with your accountant, and work out whether you're going to owe money at June 30 or whether you're going to get a refund. And so then the call might be, if you're going to get a refund, get it in quick. If it's going to be a tax bill, then have a chat with the ATO. We know there's additional flexibility of what they're willing to offer, but the most important thing is to get an opinion from someone who knows what they're talking about. BJ, you mentioned just briefly about the stimulus available. What are 4 really simple things that small business owners can chat to their accountant about and potentially get access to off the back of the state and federal government stimulus packages?
Yeah. Okay. So look, the packages have all been centered around businesses that employ people, because they're trying to keep people in the workforce. There hasn't been a whole lot for the business owner in particular. I mean, in terms of what they do, if the business owner isn't on as an employee. So last night, the ATO has actually released a bit of a fact sheet on this. So it's now locked in that one of the business owners, so if you've got multiple partners, whether that's a husband and wife team or if it's non-related parties as a team, one of those partners will be able to access the JobKeeper program. They still need to satisfy the rules, being there's been a 30% drop in turnover based on the period last year. Look, that's definitely probably the big one that's come to light in the last couple of days, that business owners will be able to access it. You need to be putting in place a plan for your employees. And we talked about communication before. Businesses need to be talking to their employees to make sure that they're across what the plan of attack is, because you can choose to go down the JobKeeper route, which is the $1,500 a fortnight for every employee. You can also choose not to go down that. So your team probably needs to know what you're thinking on that front.
So can I just jump in there? So why would I and why wouldn't I go down the JobKeeper route?
Why wouldn't you? Well, if there's, from an admin point of view, so if you think about a business that might have a whole fleet of part-timers, so let's say 30 employees that are part-time that are earning maybe $100 a week, under the JobKeeper package, they automatically come up to $750. So you then have to run payroll for all those 30 people when you're not even running a business, and it's just money in, money out. So the admin side of it can become quite costly to do. Also, a lot of, when I say a lot, but there are a fair number of part-time workers that actually work for more than one person. So they can actually choose who they want to do JobKeeper through. So there's some reasons why businesses might not go down the path. We're finding that most are definitely looking at it and will probably take it up. Because there is some sort of business happening at the moment. It's not, we've got very few clients that are in full shutdown. Everyone's doing something. So that generally means there will be an employee, even if it's one, even if it's the sole trader. And so they're definitely open to getting that JobKeeper payment.
So it sounds like it's a little bit of a rabbit, Warren, but the key conversations that you need to be having is with your accountant or with your trusted advisor, and then also get a really clear strategy on the conversation that you're going to have with your employees, and that each business is probably going to have a different time frame of how things play out depending on the admin bandwidth that they've got.
Mate, absolutely.
One of the things that's popped up on my desk has been the government-backed loans. really simply, yes, no, why not?
Yes, if it fits into the strategy. So it's not the loan's up to $250,000. It's a 3-year term. The rate's really reasonable. 4.5% we're seeing. 3-year term, it's short. So if you're going to use that money to pay your running costs, and then at the end of it you still owe the money, it can put you in a really, really dire situation if you're not able to pay it back. So
I have to pay that back within 3 years.
It's 3-year term. I'm sure it'll be negotiable. I don't know that they're going to be. Yeah, look, at the moment it's 3-year term. That's what we see. It's just, and most of them will have 6 months no payment period, so that even squashes that period together a little bit further. So, yeah, I'll be looking at the finer details on it. We talked before about how do businesses look at opportunity. That 250 grand might be the opportunity that they need to clear the decks, start again, make an acquisition, whatever that looks like. So. Part of the strategy might be that we take that loan and use it on other things. You're not. It doesn't stipulate what you have to use those funds for. Other banks are using it just for working capital. Park it in the bank account. Make sure we get through 6 months. Try not to use any of it if possible, but have it there just in case, and then pay it back at the end of the period once they're operational again. So, yeah, we wouldn't advise to grab it just for the sake of it. It needs to be part of the strategy.
Yeah. So what it sounds like, it shouldn't be your defensive strategy. It needs to form a part of that you intend for the business to get through the next 6 months, and that could be a way to help fast track what happens down, to make yourself profitable or get the business back to where it was before.
It definitely could be, but look, there is a component of it that is defensive as well. Like I think if it's up to 250. So if it's a case of, we sit down with a client and say, look, we've done our 6 month budget, we're 60 grand short, we might go for an 80 grand loan out of that amount just to be able to get us through that cash flow period. So that's kind of the defensive play. Alternatively, if a business is looking at a takeover or an acquisition or something like that, it might be 100,000 that they're going to have to spend on it. That might be an opportunity for them to do, but it needs to be part of that strategy, because we don't want to get to the end of 3 years, the bank goes, pay us back that cash, and we don't have it, because that's bad news.
Yeah, okay. So my take on it, it's handle with care, and make the decision slowly and wisely.
Yeah, absolutely.
Mate, what are some key dates that are going to pop up over the next 3 or 4 weeks for business owners?
Yeah, so the key one's going to be Monday, the 20th of April. So that's when businesses can apply for JobKeeper. I know there's been a little bit of confusion around this. There was a spot on the website, on the ATO website, where you could apply, but that was just to get information about the program. The actual application date kicks off from Monday. So if you know that your revenue's dropped by 30% or it's going to, apply on Monday. Then want to make sure you've got your BAS. So your March BAS is lodged by the 28th of April. Okay, that will then trigger the ATO to know exactly what the figures are, the potential that they're looking at. I think it's the 4th of May, you then have to lodge all your employee details. This is for the JobKeeper program. You've got to lodge all your employee details. And then in that first week of May, we're expecting the payments to come back into the business for the JobKeeper. So right now, there's a tough period where businesses really should be paying their employees the $750 per week or the $1,500 per fortnight. From a cash flow point of view, that might not be doable. So we need to be working around those problems as well.
So it sounds like you need to have a really good idea of your numbers, but also start to prepare for some conversations you may need to have if you can't pay people in the interim before the government starts providing the subsidy. BJ, I got a question from Aaron. I'm receiving conflicting advice on the JobKeeper subsidy. Can the workers still be working at a reduced capacity but be subsidised their usual wage, or do they need to be completely out of work?
So basically what happens is if they're let's say you've got a full-time position, but that's been scaled down or it's been stood down completely. If the employer is going to go through the JobKeeper system, you get a minimum payment of $750. If you're working, let's say it's 35 hours and that's more than the $750, then the business would top up based on the number of hours worked. So minimum 750, but it might be more than that, even though it might be reduced hours on what your normal salary would be.
Yeah, okay. So Erin's employees could still be working for her, albeit at a reduced capacity. If they're earning less than $750 per week, then Erin will get the $750, pass it straight on to her employees. If they're earning, say, $1,000, which is less than what they normally would, she would still top up the additional $250, but $750 is still covered by the government. So the base rule is basically reduced by 30%?
Yeah, 30% turnover.
Yeah. So, Erin, if your staff is reduced by 30%, the time they're working, turnover your business, then you're absolutely right to keep them on, but utilise that JobKeeper payment.
Yeah, correct.
BJ, what else is, just before we sort of finish up, actually, we got one from Casey here. Really good question. How can we prove a revenue decline of more than 30% for businesses less than a year old?
Yeah. So the last we'd heard from the ATO is that they're still yet to release a work paper on how that will work. Whether they look at month-to-month decline or whether there's a declaration that has to happen. It's a good question. We don't have that detail yet. It's something we're still waiting on, hoping to get very, very, very soon. It's also for, the other part of that is for businesses that may be more than 12 months old, but have only kicked off maybe 18 months ago or on a growth trajectory. So 12 months ago, they might be 3 times as much turnover as they were last time, but in the last 30 days have dropped off a cliff in terms of revenue. So it's like, well, how do we deal with those clients as well? So still got a heap of questions that we're asking. I get the government's working around the clock trying to get all this stuff sorted, and look, hats off to them. I think they've done a pretty good job. There's still some finer details that we're waiting on, and that's definitely one of them that we're trying to work through.
Casey, I'm not an accountant by trade, but what I would say is be on top of your numbers as much as you possibly can, be it month by month or year versus year if you have been over 12 months. Sit down with your accountant and work out a really clear game plan and also a story around what has happened. I think from our experience, if things are genuine and authentic, there's a really good chance that you'll get good outcomes. It's probably when people start to abuse the system or be a little bit cheeky that they'll probably find the outcomes aren't in line with what they would have hoped. Is that fair to say, BJ?
Yeah, absolutely. And one other thing to note is that the JobKeeper is only available if it's the job is and your business as a business owner, it is your primary job. So if you're working elsewhere and getting a salary, you're not eligible for it.
Yeah, so the side hustle isn't necessarily available for.
Yeah, there's certain things you might want to investigate, but at face value, reading the ATO drop sheet on it, it's off the table.
Yeah, okay. So let's wrap things up at a really high level. I'm a small business owner. Over the weekend, what should I be doing?
Sleeping probably, but I think it's spending time on the budget at the moment. I think just keep refining it. It doesn't need to be down to the nth dollar. It's just map it out per month, per week, even better, and say, look, what are our lumpy costs that we're going to have to pay no matter what? What revenue do we know is coming in? What can we add in from a government stimulus package? What do we need to live off? I think that's something that people always kind of, they might admit out of it. Want to make sure that everything's in this budget. So at the end of 6 months, we can see we've got a gap, and so we're going to have to work out how we fill that gap or where we trim. Alternatively, what surplus have we got to be able to spend on maybe some extra marketing or some extra advice or, whatever that looks like, or just to be able to have a bit of a slush fund there to have for the rainy day fund. So, I'd be spending time with the family and then maybe spending a couple of hours punching out a bit of a budget and a bit of a plan of attack for the next 6 months. Make sure that you're continually checking in with your advisor, send it through, have a quick review of it, chat to your mates in industry, whatever that looks like. I just think the more you can be doing, the better. It doesn't have to be perfect. The more comfortable you are with your numbers, and then obviously if you're battling with it, that's where your accountant can help.
At a business level, what we would definitely be saying is for everyone to be reasonably cautious in those budget numbers. There's still a lot of uncertainty going around. So if I was to look at it and go for the next 6 months, historically I did this. Let's have a look at what's in the system. Be quite cautious in what we put down. Be cautious in what we may get from the government. We don't want to sort of count our chickens before they hatch. Be on top of the ATO website for both business owners and individuals. Get your MyGov account up to scratch. And particularly for business owners, make sure that your staff is on top of their MyGov account. That's going to be a really prime communication method for both businesses, the ATO, government, and staff members. So I think that's a really important thing as well. Before we finish up, BJ, how can people get in touch with you to ask those probably more personal questions?
Yeah, well, you can reach out through here on Facebook, obviously, or through the website. And then, fire me an email is probably the best way, braden@ctrt.com.au.
Beautiful, mate. There is, for everyone watching, there is a book now button on our website. Click that. We'll get you in touch with BJ. But also, if you've got any other questions relating to particularly sort of lending and home loans, that's been a conversational piece that's popped up a lot. Sam Gawenda and Rebecca Pritchard from Rising Tide will be talking all things banking and home loans next week on a Facebook Q&A. But if you've got any questions in the meantime, please don't hesitate to touch base and appreciate your time, BJ. Get back to Finn, and I think there might be a couple of books that are in the wrong spots there. So make sure you let Amanda know on my behalf. She's got some work to do.
Yeah, she'll have a conniption if I tell her. I will not be giving her that one. I'll give you the tip.
Thanks, mate. Enjoy.
All right. See you, mate. See you guys.